think we'll just do it at 2:30.
Hi, everybody. Good afternoon. For those of us of a certain age, and I'm aging myself right now, we remember the lead singer of the band Van Halen, David Lee Roth, asking during the song "And the Cradle Will Rock," "Have you seen Junior's grades?" If that song were re-recorded today, you might be asking, "Have you seen Junior's crypto wallet?" Because unless you're hiding under a rock, or you're under the spell of El Salvador's rock and roll president, you are aware of and perhaps even feeling the financial pain of massive recent losses in cryptocurrency markets. You're seeing that the IMF has just issued a warning to El Salvador about using Bitcoin as circulating currency. And you, like everyone else, have to be asking some fundamental questions. Where is all this headed? It's a great time to be asking these questions, particularly as other countries and enterprises around the Western Hemisphere are actively pursuing cryptocurrency uptake. And yet there is so little that we know, really, about the implications for economic and financial activity, social development, and even democracy itself in a region where democratic institutions are often in need of strengthening. And if we're asking these questions, we also know that many others are too, including regulators in the United States and across the Western Hemisphere. And so our program today is an opportunity to visit with real experts on the cutting edge to hear from them about the policy implications of crypto in the Americas. My name's Eric Farnsworth, and I'm delighted to have the opportunity to welcome all of you to this important program today. We have an all-star cast, rock stars, as it were. You see what I did there? And we're delighted to have this program moderated by a good friend and someone who joins us frequently here at the American Society and Council of the Americas, Bloomberg TV news anchor Sherry On. Sherry joins us each year to host a panel during our Washington Conference on the Americas, which, if I can say, for 52 years has been the top conference every year on the Americas. And her colleagues at Bloomberg, as well as she herself, have been focusing like a laser on the emerging crypto space. Her bio, for those who may be interested, is on our website, www.as-coa.org. So Sherry, it's a great pleasure to welcome you back here to the American Society and Council of the Americas. Ladies and gentlemen, our program moderator today, Sherry On. Sherry, over to you.
Eric, thank you so much for that introduction. And thank you to the council as well for having us here again. And I gotta say, I'm sorry, I don't get the Van Halen reference. I'm more from the grunge era. But yes, you're right. I mean, we've had such a roller coaster ride when it comes to cryptos, right? I mean, Bitcoin is down, 50% from its November peak. Even right now, as I was coming in, it was around $36,000 or so. Really a wild ride. And it is so vital right now for us to understand where cryptocurrencies are going, where digital assets like CBDC, central bank digital currencies, are also going, blockchain technology, its opportunities and the risks surrounding all of these new technologies are. So we're really excited to have this panel with us today. Of course, we want to know from our experts the benefits, risks, and policy considerations, the big trends that they see in digital assets. So let me welcome our panelist, Jacqueline Khan, Chief of Cyber and Emerging Issues of the Financial Crimes Enforcement Network at the U.S. Treasury Department. Also, Patrick Campos, Chief Strategy Officer at Currencies. Alex Gladstein, Chief Strategy Officer at Human Rights Foundation. Eric Parado, Chief Economist and General Manager of Research at the Inter-American Development Bank. Also, Driss Temsamani, Managing Director, Head of Digital at Citi Latin America. And of course, we do have a very diverse and wide audience. So although we do assume familiarity with, oh my goodness, yes, then we basically understand some of the concepts that we're going to talk about. However, we don't expect sector expertise, right? So let us just break it down and sort of set the groundwork of what we're going to discuss today, because we have an exciting 90 minutes ahead of us. Driss, should I start with you? Explain to us a little bit what we're seeing in terms of cryptocurrencies, and perhaps its difference with the central bank digital currencies that have become also very popular across Latin America, and how it also differentiates with how they're set up on blockchain technology as well.
Oh, thank you for the invitation. It's a pleasure to be here with all of you. So yeah, it's in Latin America. Actually, the story with central bank digital currencies in Latin America started in the early years of 2017 to 2018, when Uruguay came up with the e-peso. That was the first initiative around central bank digital currencies before it had a name that we are now referring to. And when you look at the concept of e-peso and the success of it, at that time, blockchain did not have a mainstream adoption, nor it was used as the technology for the e-peso. So it did not allow it to flourish as much as now when we have this distributed ledger technologies and tokenization phenomena that's allowing us to move with a programmable money in society for specific use cases. And so I think we are more poised now to for success with central bank digital currencies with blockchain and tokenization compared to where it used to be before.
So, of course, every time we have this conversation about the digital assets, we always go whether it's cryptocurrencies and really deregulated, decentralized, but at the same time, compare that to central bank digital currencies and perhaps how they could threaten the monetary policy system as well. Patrick, can you give us a little bit of insight into how these classifications go and how we should actually look at these digital assets?
Yeah, thanks, Sherry. This is actually a significant issue for us. This sort of taxonomy. We come at it from an angle. We embrace blockchain technology, and we're bringing blockchain-based solutions to real-world financial problems or real-world financial transactions, if you will, really with a compliance focus. But when you think about that, we have a foot squarely planted in both camps. So while we understand and certainly embrace the need for responsibility, there's certainly this element of innovation and freedom. And I think what ends up happening is, I always say you can use a hammer to build a house or bash someone's head in. But if you take one side or the other, if you say hammers are weapons, you end up in the wrong place. And if you say hammers are just tools, you might also end up in the wrong place. So breaking it down and understanding that taxonomy becomes very important. Crypto has sort of become this kind of catch-all phrase that people throw out anytime something is tokenized, and that's very, very misleading. I think we have to separate, say, cryptocurrencies, things that are designed to, really intentionally designed to be, used as payments from things like, and there aren't that many of those, from things like, utility tokens, which again are designed to be network payments, but to really support the development of a blockchain network. From digital securities, for example, which is a space in which we typically operate, which are new representations of assets that we're familiar with from the traditional world. And then over here we have CBDC, and again, to be distinguished from stable coins, which are sort of private sector fiat representations. Some are fully fiat backed, and some are not so much. And then CBDC, an entirely different animal. Some call it government crypto, but CBDC takes different forms as well. There's sort of wholesale CBDC, then there's a concept of a retail CBDC. So I think that really breaking these things down into their different categories is important because they're very, very different, and the intended use for each one of those is very different. So I'll stop there. We can go into more detail, but obviously it's a big category, a big topic.
I know. We could get very, very technical if we wanted to, right? But let me just delve into, as you said, the wrong way to use the hammer, right? The bad consequences, because I think, Jacqueline, that's exactly what you're trying to prevent at FinCEN.
Yes. Well, FinCEN, the agency within the Bureau within the Treasury Department that I work for, broadly has two roles. First, it's the administrator and primary regulator of the Bank Secrecy Act, which is the main anti-money laundering framework in the United States. And when FinCEN turns to deals with regulation, it's technology neutral, so it regulates the activity. That being said, crypto does create unique challenges, particularly given the speed it can move and the ability to move across jurisdictions, which allow bad actors to take advantage of jurisdictions with poor regulatory frameworks. Second, FinCEN is the financial intelligence unit of the United States. 60 international partners and other stakeholders to identify and investigate illicit actors. Specifically, the section My Cyber and Emergent Issues section is a part of, works with our counterparts in jurisdictions around the world on capacity building and information sharing to combat some of the risks of bad actors misusing cryptocurrency.
I really want to get more into those risk issues that you talk about and what exactly you're looking at. But let me turn to Eric first. How do you see this crypto world, digital assets, and also, Eric, its acceptance in Latin America?
First of all, thank you very much for the invitation. It's a real pleasure to be part of this discussion on behalf of the Inter-American Development Bank. And let me use some lyrics by Van Halen too, regarding what's going on in the crypto asset market, especially for crypto asset holders. And this is a song, Jump. You got it tough. I've seen the toughest around, and I know, baby, just how you feel. You got to roll with the punches and get to what's real. I think that's the feeling these markets, and I think that's an important point, because what I like of this event is the focus on policy considerations. Because if we talk about cryptocurrencies or central bank digital currencies in this context, at the end of the day, we are discussing about the final objectives that policymakers, regulators, and innovators are trying to reach. The objectives centers around promoting greater financial inclusion, efficiency, and quality of the payment systems. And in the specific case of several countries in Latin America and the Caribbean, remittances and their costs are also key objectives because of its impact on the well-being of families across the region. I think now many Latin American central banks are trying to understand what's going on in terms of crypto assets, and also trying to understand how is their role in terms of CBDCs. Right now, 80% of LAC central banks are engaged in CBDC research, the same as for the BIS global survey sample. So that I think it's an important trend. And this new type of currency may have advantages, such as eliminating the volatility that characterizes cryptos, as they are backed by central banks. However, it also carries risk, for example, of a bank run occurring, commercial banks losing the ability to screen potential borrowers, or risk related to cyber attacks and digital security. So I think we need to study more these trends, but it's not sure how to implement these CBDCs in the near future.
Mm. And to your point about the well-being of people, Alex, let me turn to you, because of course, digital assets have really big implications in terms of humanitarian issues, whether this has been pushed as a tool for the democratization of finance or financial inclusion.
Sure. I think it would help to zoom out a little bit and think a little bit about longer term trends. We look at what's happening with currencies in Latin America. Obviously, a country like El Salvador is dollarized, so its citizens are losing about 7%, according to the Fed and the U.S. government, purchasing power in a year. Cubans have lost more than 75% of their purchasing power in the last year, as the government has restructured the currency system and has a new way of essentially stealing wealth from the people by printing them pesos and making them earn those, and then they have to go buy goods with the MLC, and in this way they're able to really loot the hymen energy of the people. It's very concerning. You have 40-50% inflation in Argentina. You have as of not that long ago 2,000 or 3,000% inflation in Venezuela. So there are like a lot of very important countries in the region where citizens are losing purchasing power really quickly. And when it comes to Bitcoin, at least, and I agree with the co-panelists that we have to be specific about semantics. Bitcoin is very different from Tether, which is very different from a CBDC. That they do very different things. And it's important, I think, in this conversation that we're about to have to be specific about what we mean when we say crypto. Like, what does that mean? Are you talking about Dogecoin? Are you talking about Fedcoin? What are we talking about here? So when it comes to Bitcoin, though, like, let's remember, like, I think the media often like exaggerates like whatever's happening right now, right? Like they tend to have a very short-term memory, right? So given what I said about currency collapse in the region, it's very important to remember that Bitcoin is up 4x in the last 18 months and is up 40x in the last 5 years. And that's extremely powerful and has been enormously empowering for people across the region. You talk about people who started to get into Bitcoin in early 2020. Tons of people in Venezuela and Cuba started getting in at that time. Forget earlier. I mean, there are people getting in 5, 6, 7 years ago. But people who are getting in when Bitcoin was $6,000, $7,000, $8,000, they're doing great. And I've interviewed Cubans who are sending money to their family in America to support them now because they're doing so well because of Bitcoin. So I think we need to zoom out and have a little bit of a broader context here and understand just like how beneficial Bitcoin has been for people, especially when you consider that a lot of folks in the region don't have access to the American stock market. A lot of people will say, oh, well, Bitcoin's just like a tech stock. Well, first of all, no, like very few people in Latin America can access Apple stock or Amazon stock. They certainly can't trade it permissionlessly, and it's not usable as money. There was a fascinating report out by El Toque, which is a journalist outlet that covers what's happening in Cuba, and they were talking about how are Cubans using Bitcoin, and they're using it in a variety of ways as a medium of exchange, not even just as a savings mechanism, but they're using it to buy streaming services. They're using it to buy stuff from Panama and have it sent over. They're using it to pay for all kinds of like technology. It's fascinating, and you know what? Like for them, they've got the regime on one side destroying their money, and the other side you have the American government, which has been completely useless in terms of lifting the embargo or helping them in any way. Biden hasn't reversed any of what Trump did with regard to Trump closing more than 400 Western Union locations in Cuba, just completely isolating the island and the people there from their families in the United States. Well, Bitcoin and to a similar extent, Tether have been there for people when the banking system has not been there. And they've had an enormous humanitarian impact over the last few years. And I think it's important to recognize that. And I'm grateful to be able to share that information with you all.
Yeah, you're really right in terms of, I mentioned 50% downside from the November peak, but you zoom out and we're talking about double, triple, quadruple gains in a longer period of time, right? And this morning I was just browsing through the news and saw how, all of these skyscrapers in New York City were being bought out by crypto millionaires out there. Let's discuss a little bit this impact that it's had in LATAM. Dris, we have seen, for example, not cryptocurrencies alone, but also retail CBDC initiatives being particularly strong in emerging economies, whether it's the sand dollar or the digital yuan. Tell us a little bit about the backdrop that's coming from.
Yeah, so look, I like the idea of zooming out and looking at the big picture. And what is it that we're trying to solve, right? And we done a study in Citi where we analyzed 220 million people coming into the formal economy through digital money, right? So any type of digital assets, digital currency. And when you bring 220 million people to the formal economy through employment in this formal economy, through digital apps for ride sharing, any type of gig economy, any one of the apps that you download and you get paid through the wallet and the virtual account behind the app, or some type of a wallet that will allow you to receive digital asset, digital currency, right? The 220 million people bring with them $1 trillion worth of flows, right? From the informal economy, which is about $25 trillion, right? So $25 trillion. And so only $1 trillion will come with 220 million people. They also allow the public sector and the retail industry to save about $300 billion worth of cash handling, right? So you save about $300 billion, you bring $1 trillion worth of flows from the informal economy, and you provide visibility and inclusion to 220 million people, right? So these are 220 million people, all they wanted is to receive money and to store it and to pay using QR codes, all of that, right? Which is dignity in many ways, because in society there's a stigma about you just using cash to pay at a store and not having a debit card or a checking account, right? And so there's a rise of social economic status just by doing that. And if that's what we want to solve, we can solve it in many ways. We can solve it in a decentralized, deregulated way, and that has its downs and maybe benefits, but it definitely has a lot of problems around it. Or you can do it in a regulated environment. If you do it in the unregulated environment, then who vouchers, who protects that person if they knock on the door and say, I need my money back, right? Who protects this person against a wallet where the company that operates that wallet can disappear overnight, as it has in many cases around the world, and taking away with them all the money that was stored in those accounts, in these virtual accounts, in these wallets. So who protects? I understand that there are systems that collapse, and with them the financial system suffers, and then the government suffers, and of course money devaluates, right? But in the majority of cases where we're just trying to solve a problem of inclusion, access to the financial system through digital assets, a regulated way of doing it protects the end consumers and protects the businesses that participates in the system, and it provides the stability and the transparency when things are done illegally. So that's the big picture. And of course, programmable money, changing the form of money today, which is cash. Cash is not a money that follows the digital economy. You cannot have a digital economy and have cash. It's too slow, and there's a lot of friction, and it's too expensive for everyone. And the digital economy is for all. And we saw that during COVID, right? Everybody needed to access the digital economy. So yeah, that's the big picture. And I believe we definitely need to have this debate about, is it regulated or is it not regulated? Yeah.
Eric, what are your thoughts on what Dries has said so far, especially as you mentioned the regulated versus unregulated in the context of Latin America as a region?
Yes, no, let me complement some comments by Dries, because using crypto assets or launching CBDCs is not the only way in which countries or central banks can expand digital payment instrument and encourage financial inclusion. I think there is a great potential in instant payment system, as has been the case of Brazil, for example, with the launching of PIX, which is a really successful instant digital payment platform that has reduced the cost and time of financial transaction in Brazil since its creation in November 2020. Now it has almost 110 million registered accounts, more than half of the country's population. And 1 year after the implementation, more than $500 billion Brazilian reais were transacted through the low-cost payment system in November 2021. According to this central bank data, PIX payments volume is already equivalent to 80% of debit and credit card transactions. So it has proven to be a powerful tool for financial inclusion. So that's an important point. That there is a couple of solutions that we can think about how to democratize payments in our countries. And regarding your question on innovation and regulation, I think that's an important question, because regulators and innovators, they are running different races. Regulator run the marathon, very stable. You have to be really steady in your race. But in the case of innovator, it's like very explosive. So it's very difficult to run these races. But you have to understand the other one. You have to understand what are the objectives of the regulators, which is financial stability, solvency, and liquidity. On the other hand, you have to understand financial innovation. And we have to find this middle ground. And I think we can find this middle ground with different options.
Jacqueline, are those some of the considerations that you have at the Treasury as well, especially when it comes to regulation really trying to catch up, and of course innovation just being very fast? And what are the elements that you need to balance out in order to approach this in an effective way?
Yeah, it's something me and my colleagues are constantly working on, because of course the United States wants to support innovation, but it has to be done responsibly and not at the expense of national security or the safety and soundness of the financial system. And with blockchain transactions, for example, in some ways it makes it easier for investigators and law enforcement to track the transactions because they're all public. So that's great from a regulatory, it's great from a government perspective. But then, as I mentioned previously, there are unique challenges, particularly related to the speed of the transactions and jurisdictional arbitrage and regulations in some jurisdictions not keeping pace, which allows bad actors to use non-compliant jurisdictions to launder money.
Let me turn to Alex, because of course you've highlighted some of the benefits that we've seen from this new technology. But at the same time, I know that in your pieces, you've also pointed out to some of the irony that countries where human rights violations are common are actually pursuing something that is supposedly going to democratize finance and really have a more inclusive financial system.
Oh, in a lot of ways, it's like the internet. All countries, I think, will eventually engage with or adopt Bitcoin at some level, regardless of their intentions, because it's beneficial for them. There's some good studies about Cuba and internet opening. The regime, it wasn't like they were excited about adding internet to empower the people. No, they just sort of had to do it to grow the economy and to connect to the wider world, et cetera, et cetera. They didn't really have a choice. So I think it's sort of going to be similar over the coming decade. But just a couple notes on what folks have said here. On the issue of protection, it's very interesting. This idea of who protects, right? As one of the panelists said. Well, with Bitcoin, like, you protect, like, if you're using it properly, you're controlling it, and no one can confiscate it or debase it or seize it or censor it. And that's a very important feature, not a bug. That's a very important feature for tens of millions of people across the region who live under very difficult governments, whether it be in Nicaragua or in Cuba, et cetera, et cetera. I think that when it comes to cash, it's true, cash is disappearing. Obviously, it can't be used in the digital economy. I 100% agree. Children born today won't ever use paper or metal money, but there are lots of benefits to cash, including privacy and freedom. And if it's just replaced with corporate cash and with CBDCs, we've lost an enormous amount of freedom in our societies. And I think that's an important point for people to ponder. When it comes to financial inclusion, I mean, there's nothing more inclusive than Bitcoin. It's completely open and permissionless. It's a non-discriminatory. It literally cannot discriminate based on your wealth or gender or ideas or background or religion. It simply doesn't know. It doesn't know your nationality. It doesn't know whether or not you live under sanctions. And that's again a feature, not a bug. And finally, I think it's worth noting that Facebook's currency project is being wound down, right? In the last 24 hours, we're seeing that. And yet, when it comes to, let's say, promoting dollar liquidity, they obviously wanted to have like a dollar project across not just Latin America, but other continents, right? That was their big vision when they rolled it out. Totally failed. But Tether, which is a cryptocurrency, has millions of users across Latin America and has been highly useful for people all across the region, and isn't winding down and didn't fail. And I think there's a lot of interesting lessons there. Tether is an asset that's used widely in Turkey, in Nigeria, in Lebanon, in Palestine. So not just in Latin America, but globally, people use it when they can't have a dollar bank account. They turn to a Tether. So I think that's kind of an indictment on big tech and how they've totally failed to help people in difficult climates, and an interesting observation of open source code, essentially, and what it can provide for people.
Dries, what do you think?
Well, look, it's an interesting debate, and I don't think there is a right or wrong side of all of this. But one thing for sure is it becomes very clear once you're the victim, right? in all aspects of life, right? I mean, in any type of regulation, right? I mean, it could be transportation, healthcare, food, right? When someone becomes a victim, and then you look for help, right? Then you want the law to come and help you. You want somebody to arbitrage, and in the lack of that, it's all good, and there's a problem. And when there is a problem, then you're going to say, well, who's in charge? Who can help me here, right? And there's no one. So again, I'm not here to answer that, to take a side or to debate this, because I provided the city view. We want a regulated environment that everyone can participate with a common objective to shrink the informal economy and to provide access to financial services to all, because we know banks have not been able to tap into the entire world population. Half of the world population almost does not have a bank account. And so, yes, they are looking for alternatives, and the public or the decentralized crypto has become an alternative. But I think if these citizens around the world, these people, the world population that does not have a bank account, if they're offered a regulated way of transacting and receiving money and using that money to pay, that has less cost, zero cost, fast, that doesn't have friction, with a very easy onboarding process and a very easy way to use that doesn't require the complexity of the banking system, which is, again, CBDC, stablecoin, is programmable money, right? Smarter money than the money we have today, which money has always evolved in form. Then I think we will see adoption. And especially if there are savings in the emission of cash, right, of fiat currency, and the handling of it in the financial system, if that creates the saving, I said $300 billion just with about $1 trillion worth of flows and 220 million people. Why can't we convert some of that as incentives for usage? Why can't we give folks that today don't have access to the financial system an incentive? Why can't we give small, medium businesses incentives to adopt, to stay away from cash and come in to the regulated financial network?
Right.
And that's the proposition we have.
Patrick, I know that you focus on compliance, digital security. What are your thoughts on this debate, especially because you actually developed the digital infrastructure for financial services, right?
That's exactly right, Sherry. But I will say, maybe counterintuitively, to the audience here, a lot of what Alex is saying, squares philosophically with a lot of our views. Maybe it comes from a slightly different direction, but I think that there's a lot to be said for that. I'll give you an example. And I guess I'll preface this by saying, but part of the problem is that a lot of times the actual problem that you have with something is not the one that you put forward, right? You use something else, and I think so it is with crypto. I think that the underlying problem is often the threat that it poses to certain monetary policies or fiscal policies, but it gets disguised under the guise of other things like AML or things like that. So when we think about that, the first thing is let's talk about the real issues, and let's not sort of pose issues as a sort of a front for other issues, and those issues are very, very important. But an example is, if someone puts their money into the stock market and the stock market takes a dive, the way that we talk about the market falling is almost as if external forces, that the person was not an idiot for having their money in the stock market, but external forces, sort of conspired to create this negative condition for them. But when it comes to crypto, if something happens in the crypto markets, you look at the individuals, hey, crypto bros, you're dumb, or something like that, right? So it already sort of gives away the way that we're looking at this, and sort of predetermining certain positions. Now, in the end, Sharon, I think this is the bottom line: is there's an absolute balance to be struck on the one hand between responsibility and innovation, between regulation and privacy. I couldn't agree more with Alex that CBDC, as well-intentioned as it may be in certain places, it is actually it's probably the most frightening anti-privacy tool that I can imagine. But the utility of a wholesale CBDC for streamlining financial transactions in a regulated sense is incredibly, incredibly valuable. And so there's nuance here. I think you can't end up, on one side or the other and find anything useful. There's a lot of nuance here, but on the balance, philosophically, we're obviously in favor of the innovation. and we obviously, bring regulatory tools. But the hope, and I'll wrap on this, the hope is also that by bringing tools that, allow regulators to become familiar with and comfortable with the technology, that also spurs what we call sort of regulatory innovation, new ways of thinking about things.
Before we move on, let me remind our viewers that you can actually send us audience questions through our live stream link, and also you can tweet us at ASCOA. We will try to get to all of your questions, so please go ahead and send them in. Let me turn to Jacqueline, because we were talking here about some of the risks that both CBDCs and crypto and entails, especially if you're trying to really deal with perhaps some obscure financial programs, corporate structures, firms that operate outside the traditional financial rules. How does the government go about trying to achieve some level of transparency there, especially when regulators haven't really caught up with the innovation yet?
It's a challenge. I'll give you that. And I really appreciate what all my fellow panelists have spoke about so far. Getting back to the basics, FinCEN is technology neutral. As a regulator, they regulate the transmission of something of value. So with that context, we're always working with industry, and we take a lot of input. We work hard with public-private partnerships to understand the technology and tools and incorporate that into our regulations. In addition, similarly, my colleagues at the CFPB, the Consumer Financial Protection, the Commodities Future Trading Commission, and the Securities and Exchange Commission work hard to combat scams from cryptocurrencies and other financial instruments to help ensure the safety and soundness of the financial system. Myself and my colleagues at FinCEN also, as I mentioned previously, work hard on trainings and capacity building with partners around the world to make sure their financial regulators are up to speed on these threats and know what to look for. Because at the end of the day, people need to have trust in their financial system to be able to transact with any of these tools, whether it be cryptocurrency, traditional money, etc.
Eric, let me ask you to expand on that, because I know that even before this panel, we're talking about that tension between regulators and innovators and really trying to keep financial stability, but at the same time not affect competitiveness, right? How do you keep that in mind in Latin America, but at the same time you're thinking about all of these risks like money laundering, trafficking, terrorist financing, and so forth?
That's why I really like this important discussion, and the solution is not easy, and that's why we're trying to come up with some solutions here. And I have to admit that in my previous life, I was the chairman of the Banking Regulatory Agency in Chile. So I try not to stifle innovation, but always with my main mandate: financial stability, solvency, liquidity. And this is really important because in some cases, you have industries or you have companies outside your regulatory perimeter. But at the end of the day, what happened with that world is going to affect the regulation. And it is going to affect the responsibility of the regulator. And this is very important because sometimes it's not within the perimeter, but when things go wrong, as Dre said, they're going to ask, who was the responsible of this? And that's why you have to take care of these issues. And it's very important because sometimes people doesn't know what are they doing in terms of their investments. Because one thing we can say, okay, regulators around the world have assessed crypto assets and they have concluded that they do not currently pose a risk to monetary or financial stability. However, crypto assets do pose a risk to investors, and anyone buying crypto assets should be prepared to lose all their money. And this is important to say because if you bought it at the peak of the price of the Bitcoin, and now you compare with the price, you have lost 50% of your money. And it's important. That's why efforts regarding financial literacy are key to implement in our countries. at the level of governments, at the level of the private sector, and the civil society.
In fact, just as Eric Farnsworth earlier had mentioned, the IMF is now urging El Salvador to ditch Bitcoin as legal tender because of the large risks, right? Let me turn to one audience question that we got. And again, a reminder that our viewers can send us those questions through the link here on WebEx, or else they can tweet us at ASCOA. This question I'll pose to you, Alex, since you've written extensively about El Salvador. Any specific thoughts on the El Salvador experiment to date? Is it a model for others or a warning?
Sure. And let me just react to what was just said. I mean, it all depends on your perspective, right? Like, is regulation good? Does regulation help people? That depends on the governmental structure, right? So clearly in Nicaragua, in Venezuela, in Cuba, regulation is not helping people. It's destroying their lives. So it's totally depending on your perspective. And even in a country like Brazil, you could argue that regulation has like not been helping people. When it comes to the idea that crypto assets pose a risk to investors, I mean, you know, currencies pose a risk to users, and you know, the posing a risk, I think, is an interesting way of framing it. Like, you know, the whole system is totally broken, and you know, risks aren't posed; they're there every day, hurting people. And this idea that like that Bitcoin is risky. I mean, no one can tell the future, but like again, like we need to like stick to the facts and look at what has happened, it transpired in history. And it has been risky to not have Bitcoin over the last decade as opposed to anything else. Like it is the best performing financial asset in modern history. So I just think we shouldn't dismiss that. That's like a, regardless of what happens from here on out, that happened. And it's very important to acknowledge that and try to figure out why that happened. When it comes to El Salvador, a great thing to discuss. It's fascinating. I think there's reason to believe that in the end, it could be just as important as an event as England adopting central banking 400 or 500 years ago. This idea of a government making Bitcoin legal tender. Now, to be clear, I think that the government of El Salvador is questionable when it comes to human rights and has its own agenda for doing this. And I think one thing I've seen is that, you know, they're trying to install this like state-run Bitcoin system called Chivo. It's quite important for people to understand, and I think there's been some advocacy in this area, that Chivo is not Bitcoin, right? So Chivo is like a promise to pay either dollars or Bitcoin. It is ripe for potential for like fractional reserve. You know, obviously, El Salvador can't print dollars because the Fed prints dollars, but they could print Chivo dollars, right? And you know, there could be a bank run, all kinds of weird things. It's a surveillance system. So Chivo itself is something that I've been trying to warn people against. But the idea of Bitcoin being legal tender in El Salvador is fascinating because, I mean, it allows Salvadorans to connect with anyone around the world instantly using the Lightning Network. And, you know, it's giving them the option of using a different currency than one that loses purchasing power on a constant basis over time. I think it's very, very interesting. And the thing I'll end with is this idea of mining and Bitcoin mining and renewable energy. I think it's going to be huge for the region over the coming decade. A lot of countries in the region have vast renewable energy reserves that are currently not being monetized for a variety of reasons. One of them is they're often stranded in places that are far from population centers. So almost every single Latin American country on the Pacific coast, going from Mexico to Chile, has volcanoes, has a tremendous amount of geothermal energy that just like really isn't really being fully harnessed because it's often in an inaccessible place. It's far from a population center. Well, with internet, Starlink style satellite internet, like, you know, one can set up a Bitcoin mining facility in any part of the country, whether it be a remote river and do hydro, a high mountain plain and do wind. And you can actually monetize that renewable energy resource and put it to work. And countries will be able to actually, like El Salvador is starting to do, countries will be able to sell bonds based on provable energy reserves
Right.
to finance activities instead of borrowing from the IMF or the World Bank or whatever. And I think that's going to be a very important innovation for sovereignty for countries, and certainly one to watch moving forward.
But you would surely agree that given the volatility of cryptos, whether it's Bitcoin, Ether, or any other cryptocurrency, you're looking at it in a very long-term way, right? But what about and in societies that have a devaluating currency that don't have political freedoms, but would you expect this to actually work in countries that have a strong currency, that have a strong system?
I mean, well, first of all, you can just use a stable coin if you're worried about Bitcoin's volatility. So, I mean, that's why Tether is the most widely traded cryptocurrency on the planet. People don't always like to risk a floating currency. But when it comes to people in advanced countries, it's going to be just as important for different reasons. Americans, I think, are going to be very interested in these systems for privacy reasons, as was previously mentioned. And we have this huge kind of surveillance capitalist system where, like, every time we make a transaction, there's like all these third parties that just vacuum up all of our information. Even if you live in an advanced society with very high GDP per capita, etc., this is going to be very interesting to you, I think, over the long term. But the point really being that, like, it gives countries an alternative way to finance and to build infrastructure. And they could do it on the back of renewable energy reserves, and that's just massive, I think, and not possible without Bitcoin mining. It's just a thing specific to Bitcoin of all the cryptocurrencies. The mining piece, I think, will be one of the most transformative things for Latin America. Some of these countries have just massive amounts of hydropower. If you look at Paraguay, for example, that can just be used in a massive way for a country that has a dollar shortage, that doesn't have a lot of hard assets. They can literally turn flowing water into hard assets. And I think that's going to be big for them.
Eric, what are your thoughts in perhaps this becoming more of a model for other countries around LATAM? Could this work? Do you expect Bitcoin to have more national clout as legal tender in other places?
I don't think so, and I don't hope so. Let me give you some numbers and some facts regarding risk and regarding volatility, because the value of cryptocurrencies is highly volatile, as we know. Bitcoin, for example, has 2.5 times the volatility of the Argentine peso, by far the most volatile currency in Latin America. 2 times the volatility of the price of oil, and 4 times the volatility of various stocks, such as the Standard & Poor's. So when we talk about risk, we have to mention that to all our audience, to say, okay, if you are going to bet on that, probably you're going to have to suffer huge volatility in your holdings. Regarding the possibility of having these crypto assets as money, it's very difficult to say, because they don't comply with the functions of money in terms of means of payments, in terms of unit of account, and in terms of value. Let me give you an example in terms of payments. Total daily transactions for Bitcoin are close to 290,000, which is close to 0.1% of daily card payments made in the Federal Reserve System in the US. So it's very tiny. And that's why, as I said before, regulators say, okay, this is not a matter of financial stability, but we should be really careful regarding investors, and we have to give all the facts and information regarding the risk of holding this type of assets.
Andres, what do you think?
Well, look, I think we definitely are all agreeing that there is a need of money to change form. We need money that's smart. We need money that's efficient. We need money that has a low-cost barrier for those that cannot access the financial system. I think the discussion is, so where what are the needs? And if we're gonna put aside the countries where this has been, the case has been put forward around, countries that were mentioned by, I believe by Patrick. No, I forgot the name. Cuba and Nicaragua.
Yeah.
Alex, by Alex, right? So let's put that country aside. But to talk about the United States and countries where People are posting every second where they are, what are they doing, what they're eating, where they're traveling to. I mean, they're pretty much giving you all the information that you need to have about their movements and their purchases and their lifestyle because they want to. I mean, they're trading great digital experiences that are for free by giving their information. To think that they're actually going to run away from a more efficient form of money, which is digital currencies that are regulated for privacy reasons, I don't know. I don't understand that part. But yes, they're going to be bad actors, regardless if they use stones, they use cash, or they use paper or flowers. They're always going to find ways to funnel money for illegal purposes, and that's, to me, I don't see the use case for it. I do see the use case of smarter money and money changing form, but I don't see a deregulated currency use case for people that just want smarter money, but to be regulated and stable and monitored by an authority that actually can come through if there is a problem.
Jacqueline, so there seems to be an understanding that there is a need for smarter money, for money that progresses towards more efficiency. In this move towards innovation, how can you mitigate the risks that come with financial innovation? And more specifically, what is your agency looking at?
My agency is considering all of these issues of developing a central bank digital currency, of El Salvador's adoption of Bitcoin from a safety and soundness perspective, from a regulatory perspective. But unfortunately, there are some things I cannot comment on at this time, but I've really enjoyed hearing what my panelists have to say. And well,
So is there a level of cooperation that is needed in order to actually help mitigate this risk, whether it's within domestically, within agencies, or regionally or globally? And is the US working with LATAM partners on this?
yes, we are working with partners around the world when considering the development of central bank digital currencies, the adoption of Bitcoin. We're also working, there are many interagency working groups within the US government as well to make sure that a comprehensive approach is being taken.
And Eric, of course, we talked a little bit earlier about the literacy factor, right? That people need to be educated in this segment as well in order to make full and beneficial use of everything that cryptocurrencies and digital assets have to offer. And I know that you've really worked extensively in Chile as well as in the rest of the region when it comes to trying to boost female entrepreneurship, especially when it comes to loan discrimination as well. Tell us a little bit about what digital assets, what role they can play in actually achieving this.
No, thank you for that question, because at the end of the day, we're discussing about financial inclusion, and we have to think what type of policy we have to implement to include more people, because this is a fundamental right. And I think the pandemic it was a wake-up call to say, okay, we have to improve digitalization, we have to improve infrastructure, and so on. So one of the research that we did recently is to ask the question regarding how women have access to financial inclusion and especially to credit. And we hired men and women with similar characteristics in terms of salaries, in terms of employment, in terms of educational histories, and so on. And they applied to loans in banks. And remember, they were actors and actresses. So the only difference was the gender. And we found out, and this is a case in Chile, we found out that there is discrimination in the system. And we have difference about 18% against women. If you try to close that gap with the same risk, assuming the same risk, the foregone loans are up to $13 billion only for Chile. So imagine that source of resources for an economy. So that's why we're trying to push forward this agenda that focus on closing gender gaps, and probably this is going to be key for our recovery. So the recovery in the next year should have the face of a woman. So that's very important.
That's really heartening to hear. And Alex, I've also seen a couple of stories that you've written about when it comes to women learning to assert their financial freedom as well through innovation.
Yeah, I mean, the first merchant to accept Bitcoin in El Salvador, in El Zante, uh, is a woman, and she's done tremendously well. I visited her pupuseria last year, and she's part of a community that really never was able to like own anything. They never owned land. They were kind of a community on the beach in this country that they were kind of caretakers for rich people in the city. They were fishermen or again, caretakers of land. And if they were to save for the future, they would literally do it with like cinder blocks because they knew that the cinder blocks, may preserve value over time. So Bitcoin obviously has been a total revolution. Now they've been able to invest and build actual structures. She showed me this like really amazing truck that she had bought over the years. Because again, this is not some like short-term trading thing. This is like this is a long-term transformation, right? And I think that it's amazing that our friend from the development bank is trying to compare Bitcoin to unfavorably to the peso, the Argentine peso. 5 years ago, if you had bought the Argentine peso 5 years ago, but in the official rate, you would have lost 85% of all your wealth. 85%. If you had bought Bitcoin, you'd be up 4,000%. So to suggest in any way that these two are similar or that volatility is a relevant thing is kind of silly for people who are out there trying to get by and trying to save for their future. The Argentine peso is going in one direction, down, 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 down. It's just a matter of how fast is it going down. Bitcoin is a newly monetizing asset that has no central bank behind it, so it can't print more when there's more demand, and it can't print less when there's less demand. So it's going to be extremely volatile, but it's going in one obvious direction, up, up, up over time. So I mean, it's a new bedrock for a new way of thinking and for longer time preference, not this consumerist now mentality, but something where you're thinking about 2 years in the future, 3 years in the future, 5 years in the future. And this is why you see, like today, we learned that the city of Rio de Janeiro is allocating 1% of its treasury to Bitcoin and cryptocurrency. And they're going to start offering a discount in this very major city, I think we'd all agree, in the region, for people who pay their taxes in Bitcoin, because those city officials want Bitcoin. They don't want the currency that they can just print. No. They want a hard asset that over time will appreciate in value. So we continue to see new events in the region that support, this thesis.
Go ahead. Was that Driss?
No, I didn't have comments, but I can comment though. So look, I don't think the debate is between Bitcoin versus any other type of digital asset, digital currencies. I think the question is, can we solve a problem for financial inclusion, provide access to the financial system to those that have been excluded while giving them protection? And I do understand the point about they can protect themselves, but protecting themselves meaning what? In the sense that, do they have like a USB drive, a thumb drive in their pocket with their currency? Or are they relying on a technology company that's going to host this for them on a cloud that can disappear because that company is not regulated, because it doesn't have an entity within the financial system, which it happened, and people have lost their digital assets. So the point is, again, I don't think, personally, I'm not debating the form. I'm trying to figure out, is there an agreement between the public and the private sector to move toward a direction where we can solve financial inclusion, providing access, and shrink the informal economy, and eventually get rid of cash, which has been around for a long time. And I don't think it's the reason why people have privacy. I think it's the reason why people don't have access. Because when a digital economy, you cannot access a digital economy with cash. Bad actors will always exist, regardless of the form of money, will always exist. And they get dealt with in a different way. But we are talking about people that just want to receive money, store that money temporarily, and use it to pay without carrying cash in their pocket.
I also wonder about, how much confidence there can be about a country that ties its financial future with as Alex might think, it's not a volatile currency as compared to, say, the Argentinian peso. But at the same time, you have seen since El Salvador adopted Bitcoin as legal tender, say back in September, its credit default swaps have risen as well, many times fold. So given that the financial system is pretty much interlinked, can you just separate Bitcoin and people owning Bitcoin and the government owning Bitcoin to all of the other financial tools and risk metrics that you have over that country? I'm just pondering if anybody has any insights into this.
Yeah, I mean, I would just say that the existing system is going to fight the innovators. So whatever countries decide to opt into Bitcoin first is not going to be a smooth ride for them. And that's what you're seeing right now. I mean, governments and alphabet soup organizations don't like Bitcoin for all the reasons stated here on this call and more. And they'll do whatever it takes to disincentivize countries from adopting it. But I don't think it's a stoppable phenomenon. I mean, again, I think it's like the internet. I mean, I think there's only so far you can go.
Patrick, I remember that you told me earlier before the panel that not to throw the baby out with the bathwater.
Well, yeah, I mean, look, this is exactly right, and I think there's there's a lot that's being discussed on this panel on sort of both sides. That I say, yeah, that's a great point. This is a great point. And I think this is what's really important. Again, to flip it around from my earlier comments, sometimes the crypto community doesn't do a very good job of putting its best foot forward, right? So, I mean, to use kind of maybe a controversial example, but if you were advocating for, say, Second Amendment rights, here you have maybe a hunter, and over here you have a serial killer. The hunter probably shouldn't go into the room and speak with policymakers standing next to the serial killer. Sends sort of the wrong message. And I think in the crypto community, you have all sorts of different people, right? So for every person that's talking about financial inclusion, there are people who just care about their, the asset that they're invested in going to the moon. Cool, you get rich. But we get really far afield. That's not the space in which we play. We've really studiously looked at the regulations the way that they exist, try to conform the technology to the existing regulations, and then try to engage with regulators about ways in which they can provide these protections without going too far. Because blockchain technology is actually a super powerful tool. And I mentioned it before, the danger that you have. So you see, sort of the model, who's all in on blockchain is China, the government of China. And there it's used, of course, they call it the system of social credit scoring. But if you think about the implications that has, and I know that we in the West will say, no, well, that's different. We have to. No, I mean, we take what they call social credit scoring, we might call ESG. And if someone takes ESG and interprets it a particular way, you have a very powerful tool for going after people. So, again, the key is responsible regulation. And I guess one more thing that I would say here is, there's a real big difference between saying, hey, there should be no fence lines. Everyone should just kind of run free and do whatever they want. And saying, no, everybody should be, harnessed to a, this grist mill stone or whatever the case may be. We certainly believe in regulatory fence lines. We certainly believe in the core principles of regulators in terms of, protecting investors, ensuring financial stability and safe and sound markets. We certainly believe in all of that. But when you take a tool like this and you think about what's the 21st century version of a gulag, it's not locking someone in a prison. It's actually shutting them off economically on social media. These are virtual gulags. And so we have to think about the technology, how it will be applied, regulation, how it will be applied. There are no easy answers here. It requires serious conversation among serious people, I think.
Eric, what do you think about the points that have been put forth?
I think it's important to have this discussion, but again, with facts, with numbers. If somebody doesn't like the comparison between one currency and the other, we have to do the homework, because if you compare with other stable currencies like the Chilean peso, the Paraguayan guarani, and so on, is 50 times, 100 times much more volatile the Bitcoin. So that's one thing. Also, an important issue is the discussion regarding monetary policy and stability of financial system. I think that's very, very important, and we don't have to forget about that. I think this discussion goes beyond, again, if you choose one currency or the other. For instance, when you have this discussion regarding dollarization in countries, in general, the economic models, you compare the volatility of one currency vis-a-vis the volatility of the other currency, and then people can take a decision. If you have a stable system, you have solvency in your banking system, and you have a stable currency, for sure, people are going to prefer to use your national currency for your payments, for your savings, for your investment, and so on. Having said that, if you have the possibility to invest in other type of assets, I wouldn't say this is a hard asset in any ways, cryptocurrencies, you can do that, but you have to have all the information in terms to know what are the risks associated to that type of investments.
Let me delve into one of those risks because we do have an audience question. The Biden administration has made anti-corruption a key priority for regional policy. Does crypto support or undermine his agenda? Eric, would you have any thoughts?
You're asking to me?
Yes. Does crypto support or undermine President Biden's agenda of making anti-corruption a key priority for Latin America?
I think we have to deal with that in terms of implementing policies to focus on anti-corruption measures, to anti-money laundering, and try to take a look on all the policies that we can implement in some way or another. Of course, if there is hidden transactions with a lot of anonymity, it's very difficult to do that job. Of course, blockchain in one way can help to do the job of regulators.
And Jacqueline, you deal with corruption issues as well, especially in this new sector that regulators are trying to catch up with. Is there anything that LATAM policymakers should keep in mind when trying to build a more secure framework for cryptos, BCDCs?
That's a great question, and it's something we're looking into. My section looks closely at the suspicious activity reports filed by financial institutions to see if there are trends and typologies related to corruption and their illicit, and to see if virtual assets enable corruption. And it's something we're still looking into. We don't have the data yet, but it's something we're considering, and more information to come on that in the future.
Driss, what do you
Eric?
think about? Go ahead.
I'm sorry. You and I had spoken just on this topic of corruption. You and I
Yeah.
had spoken previously about some of the work that we're doing with some of the multilateral lenders, and and sort of for development loans and things like this. And so this is the flip side. This is the side where as Eric was pointing out, the transparency of the blockchain when you associate it with identities can actually be a super valuable tool. So in this case, some of the work that we were doing was demonstrating how you could issue traceable loans. As you know, there's a lot of leakage in the system, and a lot of that leakage is directly related to corruption. And so I think, Eric, you were alluding to this, where blockchain can be a very powerful tool for really rooting out some of that corruption. Now that's sort of, I'm talking about blockchain as a technology as independent from crypto, as assets or a form of payment. But the technology itself does allow for that. And again, this is why it is such a nuanced conversation, because you can see how much good that can do for society to be able to eliminate that kind of leakage and make sure that the funds go to where they need to be, where they need to go, and where they're going to be the best used. And at the same time, we continue to obviously keep an eye on privacy concerns. So these are important, tough conversations. I keep repeating it, but there's so much nuance to this.
So tell us a little bit, Patrick, more about some of those considerations that policymakers need to have when you're trying to really implement these new technologies with a view that you want to make a long-term positive impact.
Well, I think it starts with really the very first question that you asked me, Sherry, which is around the taxonomy and making sure that we are categorizing technologies and different types of assets properly. And I think that again, just really another point that I raised earlier is also making sure that we're addressing the issues as they stand. So, for example, we certainly engage regularly with Jacqueline's peers. Over at FinCEN, we talk to the SEC. We don't ask for anything. We're not a crypto company. We're actually looking to make sure that we're deploying tools to industry that allow them to comply with these regulations. But at the same time, what we're also communicating is that there are new ways of looking at things and understanding things. And I think that here's what's not helpful. I mean, I was listening to a congressional hearing where a particular senator got up and said, crypto is a tool for money launderers and terrorists, literally. And when you think about that, and you say, well, you're not actually having a productive conversation at that point. That's not particularly helpful. I think the flip side of that would be, to say, well, there should be no brakes on the car. Anyone can do whatever they want. And we're not really worried about the fact that you can, push a button and send $20 million to the other side of the world in an untraceable way. What could possibly go wrong there? I think that's also a very naive position. So I think the key is to really look at the technology as a valuable tool, separate it out from a lot of the I think maybe shutting off Twitter might be helpful in this regard. But again, understand that it is a useful tool, is a powerful tool, is a tool that can be abused, and that abuse is not always on we can say it's the crypto side. That abuse can be on the government side just as easily. And I think that again, those are considerations, not necessarily hard policy positions that I advocate because I haven't stated one, but they're considerations that should state or should frame policy decisions.
Andres, I know the city is actually using digital ledger technology in order to sort of widen the alternatives to that narrow view to CBDC or single bank coins as well.
Yeah. And I was just going to say, so corruption has always existed and will continue to exist regardless of the form of money, and it gets dealt with separately with policies. But form of money has a lot to do with incentives, right? In Latin America and in many countries in emerging markets, people will use cash to get a discount. I mean, because the businesses that want to accept that cash want to give them the discount, right? For their own reasons, tax purposes, right? But form of money is not really the issue. I think accessing that money for what purpose is the point that we have been discussing. And for us, what we would like to see is a synchronized effort between the private sector and the public sector for a common purpose, so that there is no horse race and there is no competition between different forms of money, because that's going to continue creating the efficiency for the legal purposes here. No, I put the other topic aside. So to lower the cost barrier and to create higher efficiency and higher speed, we need to synchronize the effort and we need to come with common standards. And if that's blockchain, right? For the digital assets and digital assets. I mean, we can even talk about NFTs and it's tokenization of value to a certain extent. But again, more common standards, more synchronization of efforts, right? I mean, imagine if each private company had its own stable coins and none of them talk to each other, right? Then you have other companies that are born just to connect the one with the other, and then more derivatives of that, and that means more cost, more friction, more delays. So that's why we're coming forward with the how can it all come together, but again under a regulatory framework, so that when there is a problem, we have an answer to it, right? Somebody can step forward and resolve it.
Let me turn to an audience question on a point that Alex made earlier. So Alex, I'll turn this to you. Interesting point on crypto mining, given the clean energy profile in South America, how to do this in a manner consistent with best global environmental practices. Alex, would you have any thoughts?
I mean, there won't be a need for any sort of protocol or system, Bitcoin miners ruthlessly use the cheapest energy possible. And that's going to be stranded renewable energy across Latin America. So there won't be a need for any sort of ESG framework or anything like that. It will happen by the free market. I mean, that they're not going to go to expensive energy sources that are already being competed with by the existing population. Bitcoin miners can't compete with existing energy users. They have such a small margin where they are profitable. Maybe 7-8 cents a kilowatt hour. They can't compete with 10, 20. I mean, Latin America energy prices, they can't compete with 15, 20 cents a kilowatt hour. They just can't. They're not profitable. So they're going to go to places where no one else is willing to go. And it's going to be fascinating to watch. But just to point on what was said earlier, again, with these different currencies and what people are going through, just in the last 36 months, the Chilean peso has lost 20% of value against the dollar. In that same time period, Bitcoin is up 800%. So it's like, everybody has a choice and they all are responsible for their own choices. But I'm just very grateful that this asset exists because it's been able to benefit so many people over the last several years, especially where no one else is willing to help. And when it comes to financial inclusion and exclusion, I think it's really important that we don't dismiss our friends in Cuba and Venezuela and Nicaragua. I mean, someone earlier was like, oh, well, let's put them aside. Let's actually not put them aside. They've been suffering for years. And, the large governments in the region are just like not doing anything to help. And people are starving and suffering. And, the American government is not doing anything to help people in Cuba right now. It's just embarrassing. And certainly the Cuban government is not helping. They're hurting. And, in situations like that is where Bitcoin really shines and where other assets like Tether are really helping people, where everybody else refuses to help, where the existing financial system lists a whole bunch of reasons. Oh, we can't get involved in Venezuela for these reasons. Oh, there's sanctions or whatever. And they just sit on their hands and people starve. Well, that's where Bitcoin is out there helping people every day. And I think we should just have a little more appreciation for that.
Eric, let me close out the panel now with a question to you. Of course, we've been talking about so many different risks and opportunities as well for LATAM with crypto, CBDCs, and other digital assets at a time when, of course, people in Latin America have been calling for capitalism to be reimagined as well, because as Alex was talking about, there are very big populations that have been marginalized and are vulnerable. And we're not just talking, of course, about whether it's Venezuela or Cuba, but also even within countries like Chile that have been a beacon of hope for liberal democracies and capitalism that continue to see protests, even Colombia as well. So how do you think these new technologies offer opportunities as well for a more inclusive form of capitalism, and perhaps even some of the risks associated that policymakers should keep in mind?
Thank you very much for that question, Sherry, because it's really important in terms that we're trying to look for inclusive and sustainable development in our region, in all the countries in Latin America and the Caribbean. And that's why at the Inter-American Development Bank, we have put together what is called Vision 2025 in terms of trying to come up with an agenda to support the recovery of our economies. And it has to be inclusive and it has to be sustainable. And that's an important guide for us. And this includes 5 topics at least related to regional integration, related to digitalization, small and medium enterprises, climate change, and gender gaps. So I think it's very important to think about this topic because when we talk about financial inclusion, we touch upon all the pillars of this Vision 2025. And I think that's an important challenge that we have to tackle as soon as possible. And regarding payments, which is like the first step towards financial inclusion, I think the solution is in our hands in the short term. This is a low-hanging fruit that we have to grab and come up with solutions from the government, from the private sector, from the civil society, and then have a solution for our country. And I think we can find agreement here.
And Eric, just one more question because we do have an audience question at the moment. I know I sent it to you because you were also talking about education and literacy when it comes to these financial products. How does misinformation hurt the adoption of crypto in the Americas for consumers and regulators? And I want to ask there, what should be done?
I think we recently released our flagship report on trust. And we tried to say, okay, there is asymmetry of information and there is a asymmetry of power in Latin America and the Caribbean. So we have to fix that. So in terms of the asymmetry of information, we have to give information to the people, but we have to explain, we have to teach them, we have to say, okay, those are the possible returns, those are the possible risks, and then you can take a decision. And that's important that every government, every bank, every financial institution should have financial literacy programs for all their clients, for all the citizens. I think that's going to be really important. And of course, we have to try to come up with solutions in terms of what type of information they can get. It has to be transparent, it has to be accountable, it has to be based on facts, and so on. And also give power to them. And that's why we're having this discussion, to give power to the citizens of the countries to say, okay, they can take their own decisions, but with the right information.
Eric, thank you very much for those thoughts. And also thanks to the rest of our panelists, Driss, Jacqueline, Alex, Patrick. Thank you so much for a very enlightening discussion and, of course, very technical at times, but also very helpful trying to break down all of the issues. And it was a really fruitful debate. Thank you. Handing it over to you, Eric.
Thanks very much, Sherry. What a masterful job you did in pulling together some disparate threads here of a very complicated and nuanced discussion. Thank you for your leadership here. I also want to thank, on behalf of the Council of the Americas, all of our panelists for your expertise and your willingness to join us. I was taking notes furiously during the course of the conversation, learning a huge amount, and I know our folks online were watching carefully as well. We had a lot of folks watching, and for those who want to review what was said, this will be online on demand very soon on our website, www.as-coa.org. The last thing I would say, Sherry, before calling to a close is, to keep with the Van Halen theme that we launched at the beginning, one of the things that keeps coming back to me is the question, is this going to be where, dealing with crypto, is this going to be where people are going to dance the night away? Or are they going to think that this is running with the devil? And I think the key is that we're going to have to find some way to bring the two views together. But I want to thank all of you again for your help in helping us think through some very important issues. I hope that you'll come back at some point. This will not be the last time we have this conversation. We will be continuing these conversations going forward. With that, thank you again, ladies and gentlemen. This will conclude our program for today. We hope to see you again very soon at the Council of the Americas. With that, this is Eric Farnsworth signing off from Washington.